All right, as we saw, the TSX is just kind of hanging out around all-time highs, but the few sectors are definitely powering some of those gains. As I mentioned, the materials sector breaking out to fresh two-year highs. The energy sector looking at the highest level close to in about a year. Darren Sissons is partner and portfolio manager at Campbell, Lee and Ross. It's an area that he's certainly focused on as he takes a look at those materials sector. Let's first talk about the macro underpinnings of some of the gains that we're seeing in the commodity sector.
Yeah, so I think on one hand you've got an inflation carry trade. So inflation is not fully anchored. We've obviously seen a good print here in Canada. But the US economy is still tracking along. We may not see inflation interest rates cut this year in the US, especially with an election year. So that's an issue. And then obviously there's been underinvestment. Really the big ESG overlay really across all commodity sectors has been challenging. So that means less investment. And now we have issues really across the commodity space. You've got tightness obviously in copper. You've got tightness in oil. And that's gonna change. Should China come back online in a meaningful way, then we could even see movements above current levels.
I feel like that's an important point. A lot of this rally has happened without China and without, I think, an expectation of a near-term recovery in China, right? So it's not really the market front-running a Chinese recovery.
I think that's correct. And obviously China, with the recent announcements on housing, that's obviously going to be a catalyst moving forward. I think China is going to be more of a status quo with a slow movement higher, but it is the second biggest or first largest economy in the world, depending on how you want to define it. So it's going to have a meaningful impact on commodities markets. And there was obviously bulk buying during COVID, so they do have stockpiles they've got to work through. But once those stockpiles are done, different story.
I mean, the hunt for copper is on. It seems definitely when it comes to M&A and within the materials. I mean, we're looking at Hudbay Minerals doubling so far this year. Even First Quantum. I mean, if you look at it this year, it looks great. Not sure if you're a long-term shareholder, but in those base metals, I mean, are you tempted to take profits here, or are you continuing to ride the winners?
So I think as a general rule, when you're holding commodities, I think you do have to look at the technical level. So you want to buy when they're cheap, and then you want to trim up around the top. So a couple of years ago we did that. BHP we bought it at 48, and then shortly thereafter we trimmed it at 70. And then if you do that, commodities are what I would refer to as a great alpha vehicle. They can generate a lot of capital. You can add to them. You don't have to have a lot of exposure when they're inexpensive, and you buy when they're inexpensive, and then you trim at the top. So if you're not taking some profits or thinking about it when the market's at all-time highs, maybe you want to revisit that thought. What
are some candidates that maybe are ripe for some profit taking in the portfolio?
Well, I think look at Shell announced the AGM today. 18% voted against the ESG rollback.
Yeah.
78% said yes. I think it's the highest the stock's been since 2014. Shell.
Okay.
In the US.
Yeah.
I think it's about 12% below that peak, and then it's about 16% away from all-time highs. Buying back lots of stock. If you own it and you've owned it for a long time, then maybe take a little bit of profit here. But I do think that moves higher.
Well, this brings us to the energy sector. We were just, commodities was on with Andy Bell, and he was saying Suncor's hit a 16-year high or close to it. You know, some might say, to your point about technicals, these are breakouts that we're potentially seeing in the sector. Is it a breakout, or, to your point, an opportunity to kind of take profits?
Well, I think we've got a few different dynamics there at the moment. We've got conflict in the Middle East that hasn't been resolved fully. We've got conflict in the Ukraine. So what we're seeing now is we're seeing Russian oil making its way very circuitously to obviously to India and China, which is causing impact on shipping, but it's actually lengthening the product cycle. We've also got underinvestment. So what I would say is trade what's in front of you. Take some money if you've made some profits. Commodities tend to be very cyclical, but I do think we're in a cyclical upswing here. And I do think the underlying thematic on lack of investment and inflation are going to carry the stories here.
So take some profit, but if there's a pullback, you'd look to redeploy. You're not looking to move out of the sector.
Well, we're seeing opportunities really more broadly. So we have good exposure in the commodity space. We have a number of names. We have both metals some precious metal exposure, and also some energy. And that's, I would say, quite new for us in terms of the amount of exposure we currently have. And it's worked really well. So, but moving forward, there are other opportunities. For example, in the US, 7 companies are dominating the indexes, 493 are underperforming, or earnings are going sideways to down. So as those 490 names come to bear on the 7 names and buy less, then indexes have got to roll over. So there are opportunities in there, 493. Also in Europe, Asia is very cheap as well. So take some money.
Are you looking to deploy in areas like Asia? I think there's a lot of questions about, Chinese equities, for example, whether the time is ripe.
So I think the Chinese equity story is a little different. I think the issue is really a question around governance and protection, investor protection. But I do think that there are second derivative trades that you can look at in Asia that make sense. But also there are companies in Asia that make a lot of sense. For example, I bought some Samsung today. Great world-class company. Taiwan Semi, also another world-class company in Asia. So if you don't have those kinds of exposures in your portfolio, you might want to think about that.
Darren, thank you so much.